Hi, this is Tony Sagami. Hey, I want to dissect a little bit of the information that came out of Caterpillar this week. As you know, Caterpillar makes those big earth movers, but it's also a pretty good proxy for the global economy. You know, not only do they make the earth movers that we use to make roads and bridges, but they also make the engines that power big ocean freighters, and they also make those jumbo giant trucks that companies use to move iron ore, copper, and other minerals. So it really is a pretty good proxy for the global economy. Now, if that's true, you want to pay attention to them. And so what they had to say caught my eye. But not like you might think. First of all, the headline news was that Caterpillar reported its first quarterly loss in 17 years. On the surface, that sounds pretty bad. And it is, because they lost $122 million or 19 cents a share. And so on the surface, not so good. And the reason for the big plunge in profits and for the loss is a 22% decline in sales. Sales were very, very weak, especially in Europe, which were down by 40%, and in North America, which were down by 36%. So pretty darn ugly in Europe and North America. The other thing that caught my eye was that Caterpillar said that they were going to suspend activities that used up their cash. No more stock buybacks and no increase in dividends. And they also were cutting their capital expenditure budget to conserve cash. You know, that's not the sign of a company that's very optimistic. As a matter of fact, you might remember a few months ago, Caterpillar said they were laying off 22,000 of their workers. So Caterpillar certainly has their problems. But at the same time, if you dug a little deeper, you found some pretty optimistic things. Let me give you just a couple quotes. And the optimistic things they had was about China. Now let me tell you this. They said, some of our Chinese suppliers who were on 3-day work weeks late in 2008 are now back on 5-day work weeks, and some are even working overtime. And so that should tell you a lot. The Chinese companies, now that they've had their problems, are not going to immediately ramp back up unless they're very confident about their output. Now, Caterpillar should know what's going on, because out of their $5.2 billion of sales they got last quarter, almost $2 billion of that came from Asia. So they're not strangers over there at all. But you know, the reason for the growth is pretty simple. You know, I talked about China's $586 billion stimulus plan. Unlike ours, which is going to buy toxic assets at our banks and the thrifts and insurance companies, China is spending that $586 billion on roads, highways, airports, bridges, shipping ports. Things that will produce productive infrastructure as well as good jobs. And so that is doing very well. Now, at the same time, what I want you to do is take that positive data point about Caterpillar's China business and see how you might be able to make some money on that. And to me, the most logical thing is take a look at Komatsu, the Japanese Caterpillar of Asia. Being there close is a big advantage, cheaper shipping costs, and they have a greater foothold in there. And the Chinese just typically have done business with Komatsu equipment more than Caterpillar. So if Caterpillar is doing well, I suspect Komatsu is doing just great. So take a look at what these American companies tell you, but look for those little nuggets of information like the bright outlook in China from Caterpillar, and see how you can apply that toward making money in some of the best Asian stocks there are. This is Tony Sagami. Until next week.